Somebody out there right now is debating whether or not they can hire, and maybe that somebody is you. You're drowning in work, you're working way more hours than you thought you were going to when you started this whole thing. Stuff is just piling on top of your desk, and you're looking at the numbers thinking, I know that I need some help, but I really don't know if I can afford it or not. Hey, everybody, welcome back to Cash Flow Confidence. I'm Shelby Ashley, and I help business owners feel more confident about their cash flow. When most business owners decide that it's time to hire, they either do one of two things. They look at their bank account, they see a decent balance, they think, "Oh, yeah, we can do this." And then they don't have any idea whether the business can actually sustain this hire or not. They just see a great cash position today and think, "Yeah, this it's always gonna be this way. We can totally hire." Or they wait until they are absolutely so overwhelmed that they have no choice, which means they're making a very, very rushed decision with absolutely no forethought whatsoever, and it's completely reactional. And then next week, they're finding themselves like, "Oh my goodness, I have just onboarded somebody and I have no idea if we can afford them or not." So, neither one of these is actual strategy. It's just pure gut reaction. And that is not the way to do anything in your business, especially hiring new people. And so, the problem that you face is not whether to hire, it's that most owners don't have that financial outlook to say, "Yes, you can safely do this, you can bring on that new person, and you can sleep at night knowing that you made the right decision." So, I'm going to give you that financial advice today on can you hire or can you not? Do you need to wait? So, before you hire anybody, I want you to run through 3 questions, not in your head, but on paper or ideally in a spreadsheet, but, on paper at least. And question 1 is, what is this person's total cost? And when I say total cost, I don't mean what is their wage. Like, if you're hiring somebody at $60,000 a year, they don't just cost you $60,000 a year, they cost you $60,000 plus the payroll tax that you as their employer have to pay, plus any fringe benefits such as, 401k or health benefits or things like that. And so a good rule of thumb, if you offer all those things, is to take that wage, so if it was like $60,000 a year, and multiply it by like 1.25, and whatever that gives you is like your total cost. It's a pretty good quick rule of thumb for when deciding, can you afford to hire this person? And so then I want you to look at your gross profit margin, which is obviously your revenue minus your direct costs, such as any material or labor. And I want you to see, okay, that number that I just come up with, when I factor that into my gross margin, now what does it look like? And so a healthy service business should fall in somewhere like between 40 to 60% gross margin. Above 60% is great. Anything below like 50 going down to 40 is a little concerning when you're running a service business. But, when it comes to things like that, your people are going to be your biggest cost there. So when you're thinking about hiring somebody, take that number, subtract it out of revenue, and then there's your, can I afford to quickly hire this person or not? And so basically, your gross margin needs to be generating enough to hire their total cost and leave you enough to pay yourself and still run the business and still profit after the fact. So don't bring somebody in and then find that, maybe you're just breaking even at the end of the month. That's not a profitable hire. Okay. And so beyond that, the second question is, does this new hire generate revenue, save revenue, or neither? And so this matters because it changes the timeline that you're working with. A revenue generating hire is somebody like a business development person or a sales role or an account manager. They should have a clear target for when they will cover their own cost. Whether or not that happens is to be determined, but you need to have some kind of like ramp or runway to see when this person is going to start covering the cost of whatever you brought them in at. So for a business development role, usually after like month 3, I'd say at the earliest, or, around the 60-day mark, they should start paying for themselves. You brought them in to bring in more revenue. They should start bringing in more revenue than what you're paying them. Otherwise, you're losing money on this person. The next kind of hire is a capacity hire. And so this might be like a tech or admin or an ops person. They don't really generate revenue, but what they do is take work off of your plate as the business owner so that you can then go out and generate more revenue. So the financial case here is, what revenue am I leaving on the table by doing all this work that I could hire somebody to come in and do? And so I've mentioned a few times throughout this podcast, Dan Martell's book Buy Back Your Time kind of walks you through a hiring ladder of buying back your time like the name suggests. So the first thing that you want to hire when you as the business owner are finding yourself way just, overwhelmed with work is an admin role, stuff that you could pay somebody $10, $20 an hour to quickly do, like data entry, low skill needed kind of work. And then beyond that, you want to hire for fulfillment. So if you're a business owner and you find yourself actually doing a lot of the work in the business, I like to say you don't really own a business at this point, you own a bunch of jobs, and so you wanna hire to take some of that fulfillment work off your plate, and then beyond that, you wanna hire for leadership to lead the people that you just hired, and at each point, you're essentially stepping out of the business to go and do more things that a business owner should be, like, creating the vision and growing the business and things like that, and then at that point, you pretty much got a business that runs by itself, which is the dream, right? So, question three is, what does your cash flow look like for the next 90 days? Your profit and loss might show you a hire is justified because you've got pretty good profit margins, but we all know that profit margins don't mean anything if there's no cash in the bank. Okay. Do you have the cash to cover this hire? That's what you need to pay attention to. So, whether it is a revenue generating hire or one that frees up your capacity, make sure you have the cash in the bank to hire this person. Play the worst case scenario game. Like, say you hire for business development and let's say that they don't bring in any new revenue for the first, 90 days of them working. Um, you need to make sure you have cash in the bank to still cover their wage. And then at that point, if they're not bringing anything in, you can make this decision if they're going to continue with you or not. But still, make sure you can pay the people that you hire. So, beyond making sure you can afford to hire somebody, I want you to think on the flip side of this too, which is, can you afford not to hire somebody right now? If you are the highest paid person in your organization, which you as the business owner should be the highest paid person in your organization, but you're doing a lot of tasks that could cost you that you could hire out and would cost you a fraction of your hourly rate. It's like I said a minute ago, a lot of admin tasks you don't need to be doing. You can hire those out for a much, much, much lower hourly wage than what you yourself are costing. Something that business owners don't really think about at all, I've noticed in the years I've been working with them, is the time that they spend doing admin work or fulfillment work is so much more expensive than the time that they could be out doing revenue generating activities. Because you, as a business owner, your time should have a number assigned to it. Your time is much more expensive than everybody else's in the business, and oftentimes business owners find themselves as, like, the lowest paid employee, and then they hate their business, and that's not it does not have to be that way, it does not. Nobody, when you start a business, comes and says, "Hey, you have to work more than everybody and pay yourself the least." No, that's not how it should be, and so the right hire at the right time with the right financial setup is never ever a cost. It is always an investment in the growth of your business. But you have to know which hire that is and you have to know your numbers well enough to be able to make that call. And so, one action step you have for this week is calculate the total cost of the hire, not just their salary, but the total cost, salary plus payroll tax and benefits, and then map out your next 90 days of cash flow with that cost included. And then that will tell you, can I hire this person or not? What you need to focus on more than the P&L is the actual cash flow. Can I still cash flow when hiring this person? Your business grows when you make decisions like this on purpose. It does not grow when you make reactionary decisions because you're awake at 3 a.m. doing work that you shouldn't be and you're like, I'm done with this. I'm going to hire somebody now. Always make decisions like this with intention and purpose, and that's how you'll set yourself up for success. All right, see you guys next week.